Hey there, it is Mike Wise with CMG Home Loans and your weekly mortgage update. This week was all about inflation and jobs. Both of inflation is on the tame side. Jobs numbers was a little bit strong. Mortgage rates are up significantly here. So let's dig into some of the details. Consumer price index came out. The core number came out 3.3% over the last year, up 0.31%. So month over month, not a huge change. And shelter and motor vehicle insurance, they are coming back down. So you're starting to see the lag effect of the shelter, which I'm not going to go into detail on that. But basically, we're starting to see the big impact of shelter come into play and bring the inflation numbers down. Everything else in inflation right now is down to lower numbers, which is all good news. The producer price index came out on Friday today, and it was also just below expectations here, or pretty flat. But the big news right now is kind of the war in the Middle East right now is increasing the oil prices. You guys all know what happens when oil prices go up. The delivery costs go up, the cost to produce things that goes up, inflation starts to go up. So the Fed, they're kind of a little nervous. Did they raise or did they lower the rates too much too soon? Are they? What are they going to do at the next two meetings? It was expected another 75 basis points by the end of the year. That may not be the case. So depending on where the numbers come in, the inflation numbers may be a little bit higher next month. So we need to take a look at that. Also, the jobs numbers came out super strong, up 254,000 jobs in September. And you can see over here to the far right-hand side, they were expecting 150,000 jobs. They got 254,000 jobs. You see the spike of the jobs numbers going up. Both ADP and the Bureau of Labor Statistics were showing increases, and they adjusted the last 2 months up as well. So the jobs market, it's going to be a kind of hit and miss here, but at the end of the day, the jobs market in September showed very strong, and so that's worried the Fed as well. And we don't want the job market to get any better if we want interest rates to come down. I thought this was a great chart here that I saw this week, and this is the Fed rate cut history versus the 10-year yield. And so I'm going to explain this real quickly because it shows that this is not going to be a straight line down with the interest rates. Okay, so this shows this first column the dates of the cut. It shows in the second column how much they cut, and then where the 10-year yield was at that point in time when they did do the cut. And then the spike column is basically how much the 10-year yield spiked after they cut their first amount. So almost in every instance, it spiked after. There's only one time where it went down. And you can see after that, the post-cut high is how much the yield went up to after that initial spike. And then the next column over is the cycle low. So how low did the rates go when did the 10-year yield go when they cut the interest rates during that particular cycle? And so then the next column, the kind of the yellow column here, is the drop from the first rate cut. And then what we did is we took a percentage and we added that together, took a relative percentage over all these cuts, came up with 37%. So if you actually go from the post cut high of 4.06 and drop it by 37%, that's 1.35%. You're going to get down to 2.35% would be your cycle low. That would put mortgage rates below 5%. That would put you into the fours. So that would be good news. If history repeats itself, you may see interest rates go down to the low fives and maybe even into the fours for interest rates. So what's happened with the treasuries and the yields? They've gone up this week as a result of all the inflation and the job numbers, especially the job numbers that came up. we're hitting a support level here at basically 100.18. Remember, when prices go down, interest rates go up, the yield goes up, and that's what's happened here. The yield has jumped up to 4.07. It went up to 4.1, 4.12 this week. And as a result of that, mortgage rates, they went up by about 40 basis points from last week. So if you compare last week, you can see that they're going up pretty fast here, that they drove up there. And the jumbo rates went up about 30 basis points as well. So mortgage rates are up. And if you compare to a year ago, we're still a percentage point lower. We hit the 8s over a year ago. And but the mortgage rates today are hitting right at 6.625 for loan amounts under $800,000 on there. So interest rates are high. So we have this 1-year special with lower payments. You can give me a call and go over it, but this will show you how to do a one-year buy down, lender paid. So it saves you about $200 a month in your monthly mortgage payment. Give me a call. I'd love to go over it with you. Hopefully you have a great week. And if you have any questions, I'll be around this weekend to answer any questions that you have. Talk to you next week, and we'll see you soon.